Kishore Narne. He's Senior VP Anand Rathi Commodities and he joins us on the show. Kishore, hi, welcome. Today seems to be a day when you have seen a bit of opportunity buying or perhaps bargain buying on the lower side. The data from the US markets or the international markets also is positive. Starting with crude, do you think it's taking a breather or we have pretty much done with the decline?
No, I think the breather is coming from the dollar. Actually, after the FOMC minutes coming in, the debate for Q3 again reopened, which again suggests that slight weakness in dollar. Also, the Japanese GDP data also has been pushing up the Asian currencies. So overall, the dollar weakness is pushing up most of the commodities, including crude. So I think we are not yet done. Probably we might be looking down towards around $90 for WTI, which could be around 4,900 or 4,850 on India. So I think we will have a slight pullback, but I think I would be suggesting to sell on rallies towards around even at current levels with stop losses of around 51.20 for the near month on MCX. Look for targets close to 5,000, 5,010 kind of levels through the day.
Kishore, how about the gold and silver prices? Because a bit of a buying coming in for that one as well, while most of the international agencies are still bullish on the gold prices, and we have seen nearly 1% of gains coming in for that one as well. Would you start buying into this space as well?
No, I think I've been there saying this for a long time now. We're not bullish on gold for the entire year, for that matter. Probably we will be seeing gold prices over a medium term towards around 1,410 or $1,400 levels. Again, given that rupee might further depreciate towards around 55.5, probably you might not see that kind of a fall in India, but certainly 26,800, 27,000 is on the cards now.
Kishore, how about the silver prices? Because there has been a bit of a turnaround in that as well. 52,000 has held on. Would you say that that could be an immediate support for the markets?
Yeah, I think 51,000 is a good support. That's around $26 on international markets. We can see a pullback towards around 27.5, 28, which is around 54,300. But again here, like crude and copper, we'll be suggesting to sell on rallies again, and silver also. So I don't suggest any buying in this. Probably if somebody has to trade intraday also, still I would be suggesting to sell on rallies.
How about the copper prices? Because the turnaround is good. The Shanghai markets are trading in a premium as well today. So, while with other commodities, as you said in the other industrial commodities that you might want to sell on rallies, how is the base metal sector looking right now?
I think base metal, especially the copper, is going to be one of the most bearish commodities looking at the next month or so. Probably I am looking at copper close to $7,300, $7,200 levels in a month or less. So at this point of time, we can see a pullback towards around 425, 430 in between. We can sell and look for targets close to 414 kind of levels in a day or two. But over a medium term, probably we could be targeting 380 to 390 on Indian markets.
Kishore, how about the other metals like aluminum or nickel, which have declined 7 to 10% in this year now? Lead and zinc have turned negative for 2012 as well, down nearly 20% now. How are you looking at these base metals?
So nickel, if you have observed over the last even a month or so, it's been stuck in that trading range of around 900, 910 towards around 940, despite most of the other commodities being beaten down. Because that below that $20,000 mark, the nickel pig iron production comes under threat as the cost of production stays there. So I think we are not seeing any major downside in nickel, but probably 80 could be a possible levels where we can enter on the long side. But on the higher side, 940, 960 should be a sell on nickel. But again, even on the aluminum front, 102, 101 is there. The cost of production close to around 2150 to $2,100. So where it might not fall steeply from there. So I would be looking to buy close to 100, 101.
Kishore, before we let you go, one question on gold with you as well. While the gold prices have been choppy, and as you said, you're not so bullish onto the prices, it seems like a negative story for you for 2012. The World Gold Council isn't exactly saying that.
I think again, as he said, that probably till Diwali the physical demand will be softer. So I think overall we are pegging somewhere the entire, if you combine the investment demand as well as the consumer demand, we are pegging somewhere around 40% decline on year-on-year basis for India. Having said that, I think every safe haven asset or every consumer will have a certain value point where he will stop getting new money into gold. So I think here, once the gold prices come down to around 26,000 levels, odd levels, then the consumers will return to gold unless even the investors are having a difficult time to hold gold, because they're going to have a huge amount of risk because of the top being made recent times, and also there is a possibility that down the line 6-8 months rupee would start appreciating, and then that would also eat into your gains. So that would hamper the investment demand as well. So overall, probably maybe we can play a couple of days bounce back in gold, but otherwise overall we should be remaining bearish on gold.
All right, so very cautious. Other bearish views coming in from Anand Rathi on precious metals and more on gold.